Hello everyone, this is the part 2 on how I select my stocks in my challenge account. Please refer to the part 1 if you have not done so, and remember to stay until the end of this video for the bonus step 6, a quick revise on my 5 steps. Step 1, long-term uptrend. Step 2, consistently increases of revenue, net profit, and cash flow generated from operation. Step 3, debt profile and healthy cash flow. Step 4, economy mode, industrial leader. Step 5, future growth driver or sunset industry. Important disclaimer. Please note that all the stocks shared in this video is only my opinion and for educational purposes only. They are not stock tips, so please do your own research before investing any money in. Let us start with one of my favorite stocks, Microsoft. The ticker is MSFT. Microsoft is in the technology sector. During the recent Nasdaq sell-off, Microsoft is one of the best performing tech stocks with only around 9% of retracement if compared to the Nasdaq correction of 13%. Moreover, while the Nasdaq is still on its way up to the high, Microsoft has already achieved all-time high this week. Step 1, long-term uptrend. Microsoft has a very nice uptrend for 10 years. Since May 2013, it is always traded above moving average 200. It passes the first criteria. Step 2, consistently increases of revenue, net profit, and cash flow generated from operation. This is the income trend for Microsoft. From the graph, Microsoft definitely shows consistently increase of revenue, net profit, and operating cash flow since year 2012. It passes the second criteria too. If we further look on its earning history from Alpha Query, Microsoft only missed its earning once, just 1 cent for its fiscal quarter end 2016, March 31st. Other than that, it beats the earning perfectly all the time since year 2015. Step 3, debt profile and healthy cash flow. From the table, Microsoft has a current ratio of 2.6 and a debt to equity ratio of 0.55. From its balance sheet, the ratio of Microsoft total current assets to total current liabilities is 2.51. There is no doubt that Microsoft has a very healthy debt profile and it passes the third criteria. Step 4, economy mode, industrial leader. We can easily identify the economy mode of Microsoft with this question. Look on your office desktops. Which operating platform are they using? If you are not using MacBook, which operating platform are you using? From the stat counter, Windows, the operating platform from the Microsoft, has the second largest operating system market share worldwide as in March 2021, with 32.39%. If we only look on the desktop operating system market share worldwide, Windows is the top with 75.55%. Moreover, from the Microsoft earning release financial year 2021 quarter 2, Microsoft 365 consumer subscribers increased to 47.5 million. The high switching cost of Microsoft operating platform is definitely provides Microsoft a strong economy mode. How about market leader? Do you know that Microsoft is the second biggest component in SPY? As on 8th of April, the percentage holding of Microsoft in SPY is around 5.42%. The top spot is claimed by Apple. If we look on the market cap, Microsoft is also the biggest giant among its peers. With a strong economy mode and as a market leader, Microsoft passes the fourth criteria. Step 5, future growth driver or sunset industry. Microsoft does not only focus on its operating platform, it also has other products such as cloud services, gaming or Xbox, and LinkedIn. Some products of Microsoft Cloud are Microsoft Azure and MS Office 365. Cloud computing is an unstoppable trend in the IT industry. Microsoft is one of the oldest and the biggest cloud service platforms that enterprises rely on. I am not a tech person to go into details in this area, But in general, the cloud gives small, medium, and large-sized companies the ability to simply rent the apps and servers they need instead of having to buy them. The cloud frees the businesses from paying a huge sum in maintaining of servers, telephone equipment, and other IT solutions. With the cloud, right, computing resources are housed online so they can be accessed from anywhere with an internet connection. Private cloud can be set out too, so the resources can only be used by the authorized users. Using MS Office 365 as an example, we can use MS Office 365 to access the document online, set out the meeting, synchronize our email and calendar easily online, everywhere and anytime. From the Microsoft earning report, we could also see that the revenue for Microsoft Cloud Services is increasing. In addition, LinkedIn, the revenue is also increasing. I consider it as a social media platform, as people can advertise over there. It is also one of the future drivers. Last but not least, the recent news on Microsoft wins 21.9 billion deals to build Army's AR headsets further shows that Microsoft involved in the AR business, which is also a future driver of a disruptive technology. Still think Microsoft is too old to have a high growth? Look on the FinWith data on EPS next 5 years. The estimated growth is 16.7%. Summary for Microsoft. Step 1. Long-term uptrend. Pass. Consistently increases of revenue, net profit, and cash flow generated from operation. Pass. Step 3. Debt profile and healthy cash flow. Pass. Step 4. Economy mode. Industrial leader. Yes. Step 5. Future growth driver. Yes. Microsoft is definitely a company that we can park our money, close our eyes, and let the money to compound itself. Next stock, Thermo Fisher Scientific. The ticker is TMO. This is the first stock that I'm going to introduce in healthcare sector. Therefore, this serves as a good diversification too. Step 1. Long-term uptrend. TMO has a very nice uptrend for 10 years. It passes the first criteria. Step 2. Consistently increases of revenue, net profit, and cash flow generated from operation. This is the income trend for TMO. From the graph, TMO shows a solid and consistent increase of revenue, net profit, and operating cash flow. It passes the second criteria too. From Alpha Query, TMO beats the earning perfectly since year 2015. In addition, we can also see that the EPS growing is very obvious. As a company with increasing EPS and beat it consistently, TMO is really a good and solid company to invest in. Step 3. Debt profile and healthy cash flow. From the table, TMO has a current ratio of 2.1 and a debt to equity ratio of 0.63. From its balance sheet, the ratio of TMO's total current assets to total current liability is 2.13. If we further look into its balance sheet, the cash and equivalents of TMO is 10,325 million, which is more than its total current liabilities. That means that if TMO happy, it can just pay off all their current liabilities immediately with the cash easily. There is no doubt that TMO has a healthy debt profile and it passes the third criteria. Step 4. Economy mode or industrial leader. Thermo Fisher Scientific is the world leader in serving science. As a researcher myself, I know that Thermo Fisher Scientific has a very strong economy mode in scientific instruments and research solutions. In general, it means business segments include life science solutions, specialty diagnostics, analytical instruments, and lab products and services. Both increasing population and aging require the needs for better biological science solutions, including both research and diagnostics. There is no doubt that Thermo Scientific will still play important roles in this area. Moreover, once it sells an instrument, the customers normally will stick to it and purchasing its software, consumables, and require maintenance. The high stickiness also provides a consistent revenue to the company. Compared to the market cap, Abbott Laboratories have higher market cap to TMO. However, similar to the case of Costco and Walmart, Thermo Fisher Scientific has a more convincing income trend to me. That is why I still prefer to invest my money in TMO. Step 5. Future growth driver, sunset industry. What is the recent healthcare issue to the world? COVID-19. Extracted from its recent earnings report, delivered an extraordinary year of high-impact innovation, establishing leadership in COVID-19 testing, highlighted by the Applied Biosystem Tech Path COVID-19 Combo Kit and Amplitude solution for high-throughput PCR-based testing. In fact, this also contributes to TMO recent amazing earnings. From here, we can clearly see that Thermo Fisher Scientific will always be one of the front line for innovative healthcare services. While COVID-19 the last pandemic? Definitely not. Moreover, a company that supports the R&D of biological science worldwide, there is no doubt that it is a company with a lot of future drivers. Thermo Fisher Scientific also acquires Novacep, which manufacturing viral vector for cell and gene therapy, which will be one of the biggest breakthroughs in human health therapy. From the FinWith table, TMO has a positive EPS next 5 years of 4.12%. The number is not amazing. In my opinion, the reason is because EPS growth for TMO during the pandemic period is tremendous. For example, EPS this year, the EPS is expected to be as high as 73.80%. As the EPS next 5 years is calculated based on the current EPS of TMO is inflated by the pandemic. The calculation to estimate the growth for the next 5 years are expected to be slowing down. In my opinion, this causes the next 5-year EPS is not accurate in this case. But if we observe the past 5-year EPS, the growth was 26.5%. Overall, TMO passes my 5th criteria. Summary for Thermo Fisher Scientific. Step 1. Long-term uptrend. Pass. Step 2. Consistently increases of revenue, net profit, and cash flow generated from operation. Pass. Step 3. Debt profile and healthy cash flow. Pass. Step 4. Economy mode, industrial leader. Yes. Step 5. Future growth driver. Yes. By the way, United Health, ticker UNH, or Johnson & Johnson, ticker J&J, are also very good companies in healthcare sectors. They are the industrial leaders in their respective sectors too. In addition, both of them provide good dividend. You may be consider them to be included in your portfolio for healthcare company. Before I go to the next stop, please subscribe our channels if you have learned something new here. It is not easy to prepare the video. Thus, we would also appreciate if you could give us a like to motivate us. The next ticker that I'm going to introduce is an ETF, XLE. XLE is an ETF that tracks energy sector. Energy stock is a stock that was hit badly during COVID, and most of them are not yet recovered to their pre-COVID price. Take XLE as an example. Pre-COVID price was around $62.44, but its current price as on 9th of April is only $48.14. XLE is heavily affected by the crude oil price. In general, when crude oil price increases, more revenues will be generated from the companies in the XLE components and drive the XLE price higher. As oil and gas industry is considered as cyclical sector, the revenue and net profits varies with different seasons. For instance, look on the 10 years weekly chart of XLE. If we invested our money in year 2011 and we never touch it, we will lose our money today after 10 years. However, if we look on the midterm perspective, we could observe that the price is normally up and down for a period of time. Therefore, XLE is very different from the previous stock that I'm introducing. Those stock, right, we can just buy and hold long term or even close our eyes without touching them. This is not the case for the cyclical stocks or cyclical ETF such as XLE. Therefore, we need different strategy in energy related stock. Next, let us compare the XLE price to the crude oil price. In December 2019, XLE price was around $60 to $62. In February 2020, XLE price was at around $54 to $55. If we look on the crude oil price, at the same period, the crude oil price in December 2019 was around $59 to $64. In February 20, before the COVID-19 crash, the crude oil price was at around $50 to $55. Look on the table here. How about the current price? As on 9th of April, the crude oil price was at $59.3. Based on the table here, XLE should be at around $60 to $62, right? However, the current XLE price is only $48. Moreover, compared to other sectors, which are also hit hard during the COVID-19 crash, such as finance, XLF, materials, XLB, industrial, XLI, XLE is still have not recovered to its pre-COVID price. With the control of the pandemic and more boundaries opens, more travel activities, more flight required, the demand of the crude oil would definitely go out. Of course, the crude oil price is also heavily affected by the political issues. The decision amongst the members in OPEC, OPEC Plus will also affect the oil price. As XLE is not a stock, we could not use the 5 steps that I have shown so far. However, we could look on its top holdings. If we check their charts, they all have similar patterns and hit badly and not recover to their pre-COVID level. Could we predict which company will outperform the rest or which oil and gas company will be the winner? To be honest, I could not predict it. And I am not working in oil and gas industry too. Therefore, to me, invest in the ETF or XLE is the easiest and the safest way. Last but not least, from the technical point of view, the Fibonacci extension shows that the profit target is around $63. If the crude oil price stays at $60, I will also expect the XLE will adjust its value back to $60 to $62. Thus, I will hold XLE and sell it when it reaches my target price of around $63. Finally, let's talk about the risk. As XLE is considered a cyclical ETF, I would strongly suggest controlling your portfolio allocation. To me, it won't be more than 10% of my overall portfolio. As when the cyclical stocks starts to move outwards, the momentum could be really strong for quite a period of time. Then I can enjoy a nice profit from it. However, we never know when the boundary between countries will really open. Or even we do not know when the pandemic will be controlled. Or we could not predict what the political events will happen that could affect or hit the oil price. Thus, I may need to wait for a very long time, or the price may move downwards instead. I lost both time or opportunity cost and money. But as the allocation is lesser than 10%, the impact won't be big to affect my overall portfolio return. Overall, it is a game of risk-rewards ratio, right? By right, the last position to introduce here in my challenge account is ARKK or ARK Innovation ETF. However, as I also plan to introduce Katie Wood, the concept of active ETF, ARK holdings, my speculative play and strategy, I guess it will be better for me to prepare another video just for ARK. The last bonus criteria is dividend. All the stocks that I introduced in my challenge account, except XLE, have a very solid fundamental and long-term uptrend. I am very confident if I park my money with this company for 5 years or even 10 years, it will definitely compound my money to a much bigger number. Of course, With dividend, it can further accelerate our capital gain to compound our wealth. This is the summary table for the dividend yield for the stocks in my challenge account. Which is your current favorite stocks to hold for long term? What are the criteria are you using to select the stock? Share with the community in the comment. In the next video, I will be sharing the important mindset in investing. What should we do when the stock is going higher? What should we do when the stock is tanking? Many people make mistakes by applying the entry and exit rules of trading in the investing and lose money. Investing has very different rules to trading. I will share more in the next video. Remember to subscribe our channel, turn on the notification bell to get the update. Thank you and see you in the next video.